You know, the final nail in the coffin may have just been hammered in when it comes to commercial real estate. With the price of oil escalating like it has the last 3 months, according to the Iranian war, the invasion, the military action that's taken place both in Iran and Lebanon, and the disruption to global supply has caused massive increases in energy prices, which ultimately has increased inflation across the board in almost every asset class. Commercial real estate for the last 5 years has been waiting patiently for interest rates to go down low enough that refinancing can take place and can occur. Lenders are worried to death about all kinds of covenants in their loans having been broken 2-3 years ago, but they did not want to take the assets back. But now if you take a look at what energy is doing, energy has become the final death nail to many commercial loans and loan portfolios that banks are now being forced to take back. Interest rates are not being talked about going down. President Trump came out last week and said, I just don't want the new finance secretary, Warsh, to come in and lower rates. I'm not asking him to do that. I just don't want him to go up on the rates. That's a big concession that kind of slipped through the media without anybody really paying much attention to it. But the data, the CPI numbers, the inflation numbers fully suggest there's no reasonable or rational probability that interest rates should go down anytime in the next 6 to 12 months, if at all, in the remaining part of President Trump's term. So how does that affect real estate? Well, those of you who are real estate experts that are listening, you know how it's going to affect you. Higher insurance, higher fuel, higher utilities, higher electricity, higher replacement costs, higher construction costs. We're in the oil and gas business. We're already seeing diesel surcharges and increases across the board relative to raising energy prices. These oil wells we drill, they burn a lot of diesel fuel to run that rig. We burn a lot of oil and gas to drill the wells that provide the raw commodities like crude oil and natural gas. So if I'm out in the commercial real estate market, I'm looking to myself saying, I've been waiting for some relief. I've been hoping that interest rates would go lower. I could hope my cap rate would go lower so I could sell it maybe for what I paid for it or close. Maybe I lose some equity, but maybe I get the debt out of my hands. That's not the case. I talked to a good friend of mine who's a big-time commercial real estate agent all over the country, if not internationally, and he said, look, I now have banks calling me telling me they got $15 to $30 billion in assets they've taken back. It's just going to grow from here. So when you as a real estate investor, you are in self-storage or cooled storage facilities or in self-storage or multifamily, whatever you're in, when you look at your financial capital being deployed for either retrofit or new construction, you've got to look down at your balance sheet and your budget and say, wait a minute, we got a whole new cost coming in we never counted on. We didn't count on supply disruption. We didn't count on massive rises in prices of goods and services and logistics. We didn't count on all that on top of our financial model, also in what might be a weakening economy. And why is the economy weakening? Well, it's going to grow like crazy in certain areas. Let's face it, data centers, AI, anything touching construction, AI, and data center is booming. But how about the rest of the economy? What's happening to dentists and doctors and normal service providers who are saying, guess what? When the consumer gets strangled out of their discretionary spending, they stop going to the store and the movies and the restaurants. They clean their teeth every year, not every 6 months. They put on braces every year or they delay it altogether. In other words, the consumer out there is really feeling the pain of the rising price of oil. The massive multi-billion-dollar companies are plowing ahead like there's no tomorrow because they have financing and capital and they have all kinds of stock they can lean against. And so they're growing as if the war never started. But the underpinnings we're all faced with today is what? We're faced with the reality that we might be in a position where we see stagflation. We might see rising costs and very little to limited growth. The other question is, truthfully, no one wants to talk about it. How much is AI going to eliminate high-paying white-collar jobs? I was in my law firm the other day, walked in, normally packed, every row, paralegals, secretaries, lawyers. I felt like I was walking into an office going out of business. Went to my meeting and had a question. Where is everybody? AI. We've been able to figure out how to do all the work they were doing using artificial intelligence and the different applications specific to the legal industry. We now can get work done 5 times as fast with 80% less people. That's not just a one-off. That's what's taking place in the real world. So now blue-collar jobs, which are service jobs like welders and air conditioning, pipe layers, plumbers, people who actually have skills that are needed beyond AI's capability are in high demand. But will they pay the same thing as the white-collar people that are being laid off because of AI? So we have this vacillation and rotation in the labor market in terms of economies and who gets a job and who doesn't. But a guy that's welding, he's not going to go out and buy $1 million house. He's going to take the next 3 or 4 years as a windfall. He may upgrade his truck. He may upgrade his house. He may buy a travel trailer, but he's not going to go out and buy that new swimming pool and that new Porsche and that new Mercedes and join the country club, because why? That's not his lifestyle. An enormous change in the structural content and the allocation of our employment force in the United States is changing like it's never changed before since like the 1920s. And as a result, the economy is going to have all kinds of twists and turns that we have to be aware of. I view AI as it is happening. It is real. Get used to it. And it's going to happen in a way that none of us can really predict. It's happening so fast. But the fundamentals of that happening means tremendous amount of money being spent on services that only require limited numbers of employees, massive income generating assets, data centers, etc., that provide very little in terms of high-end jobs. We're going to have a massive separation between the middle class, massive separation between the ultra-rich and the wealthy versus the middle class, and that's happening right before your eyes. But one thing's for certain, everyone's going to keep burning as much, if not substantially more, oil and gas. Everyone who is watching the economy today is like somebody saying the house is on fire. They're running for the public markets and stocks. They're running for cryptocurrency. They're running for real estate that's supposedly distressed, which is not. They're running in every direction thinking, I got to be in. Sometimes standing still is the best answer. Sometimes evaluating the markets makes the most sense. To me today, it's going to be data-driven technology, AI. It's going to be fundamental supplies like mining and lithium and nickel and copper and oil and gas. It's going to be about real estate because you can't replace it, and specific real estate has specific values. It's going to be about looking at what the market's going to do relative to debt. The United States is almost $40 trillion in debt. The cost of that capital and what it does to our economy. And by the way, folks, this is far, far deeper and far more relevant than the next 30 months of President Trump's term. It has probably the next 5 to 10 years is going to affect each and every one of us. Today's the day to start figuring out how you're going to respond today, 36 months from today, and probably the next 7 years. It's the most critical time probably in our adult lives taking place in the next 60 to 72 months. Thanks for listening.